Hello, everybody. Welcome to a special episode. We have Dan Habib with us from MBS Highway or Highway.ai. And Dan, welcome to the show.
Chris, thanks for having me. It is my pleasure to be here.
Awesome. Right on. Well, there's so much to talk about. Why don't we open up with a little bit of the market update that just happened, your viewpoints on that, and then we'll veer off into the fun, more personal stuff.
Yeah, well, today was a big day because we had the conclusion of the Fed's two-day meeting. So at 2 p.m. Eastern Time, they released their Fed statement, their decision on what they're going to do with rates. And this was also one of those meetings where they released their summary of economic projections. Now, going into this, those of you on Highway know that we were a little bit worried about this Fed meeting because we thought the Fed would cut, but we thought it would be a hawkish cut. Well, sure enough, the Fed did cut rates by 25 basis points. So that means this year they've cut by 1%, but they had a hawkish tone on their forecasts, on their statement, but also on how many rate cuts there's going to be next year. So, Chris, I actually just put this together as the Fed meeting was happening in real time. So we might as well just share some of this, right? So there's a couple different components to the Fed meetings, right? One is they released their statement. So the statement showed that the Fed cut 25 basis points, and that means that the Fed funds rate is now in a range between 4.25% and 4.5%, or the effective Fed funds rate is 4.375%. Now, all of the Fed members voted in favor of this except for one, and that was the Cleveland Fed president, Beth Hammack, who wanted a pause instead of a rate cut. Now, the statement was pretty similar to the previous statement. They make some very little changes that you have to kind of be keen to. For instance, previously they said in considering additional adjustments to the Fed funds rate, we're going to be looking at incoming data, but they changed that to in considering the extent and timing of additional adjustments. So that's a little bit more of a hawkish tone, but they upgraded their view on the economy as well. They said the economy is expanding at a solid pace. They said that labor market conditions have eased and the unemployment rate is higher than it was, but it's still low. And they said that we've made progress towards their 2% inflation goal, but it's still somewhat elevated. And listen, the Fed's still going to continue to reduce their balance sheet, although I do think sometime in 2025, they're going to stop that, which could be a good thing for mortgage rates because that means the Fed will have to start reinvesting more of the proceeds falling off their balance sheet into the Treasury markets, which could help things a bit when that occurs. But they also said that they are going to be doing less rate cuts next year. So part of what the Fed releases, not every meeting, but every other meeting, is something called their summary of economic projections, or a lot of people refer to it as the SEP. So you can see what they have with growth. Now they upgraded their view on growth. They thought this year it was going to be 2% just 2 months ago. Now it's 2.5%. And next year they upgraded where they think growth is going to be by 1/10. And then the unemployment rate, which is very important. The Fed has a dual mandate, remember. Stable prices, meaning they want to see 2% core inflation, and maximum employment. They don't want to see the unemployment rate go too high. Well, previously they thought this year the unemployment rate would get to 4.4%. They downgraded that to 4.2%. So making the economy a little bit of an upgrade, a little stronger. And then next year they thought 4.4%. They downgraded that down to 4.3%. So reduced where they think the unemployment rate is going to go to. And if you take a look, and I like to really dig deep into these things, you can see where each of the 19 Fed members actually believes the unemployment rate is going to be. And boy, they made some changes from 2 months ago. But here's the scoop. You have 14 Fed members that think next year the unemployment rate is going to remain in a range of 4.2 to 4.3%. And then you have 5 that think it's going to be in a 4.4 to 4.5% range. So all 19 Fed members don't see the unemployment rate going above 4.5% next year. Now, it's my view that the labor market isn't as strong as a lot of the published data out there, especially when you see some things like these QCEW, quarterly census of employment and wages. You see some of the revisions where about half of the jobs that the BLS said happened last year didn't actually occur. They have an issue where they're overstating job growth and then revising it significantly. And then you get the actual data many, many months later, and you find out a lot of those jobs didn't occur. But the bottom line that I take away from this is that the Fed, they change their mind very, very quickly. But if you see inflation really start to come down, or if you see the labor market show a lot of weakness, they could change their tone very quickly.
Yeah.
So I think that by looking at this, 19 of the 19 Fed members don't see the unemployment rate going above 4.5. Boy, if you see the unemployment rate get to that level next year, they're going to have to cut more aggressively. Now, inflation, they upgraded where they think inflation is going to be this year and next year. And the big one is the dots plot chart showing the Fed funds rate. So previously, 2 months ago, they had projected 1% in rate cuts. And if you look at this chart, this is called the dots plot. 19 Fed members anonymously plot where they think the Fed funds rate is going to be. So 2 months ago, the median was at 100 basis points, meaning they were projecting 1% cuts in 2025. If you look at the one on the right, this is from today. Notice how a lot of these dots have shifted upward, where now the median is at 50 basis points, which means that they have removed 225 basis point cuts from their projections. And the reason why they're doing this is because, boy, they think the economy looks strong. They think inflation's a little bit stickier, and they think the labor market, some of those concerns they had about the weakness in it have diminished. You put all that together, and the bond market really didn't like this. We had advised locking ahead of this because we were fearful this was going to be the case. But boy, I don't like being correct on this, with mortgage bonds down 52 basis points and the 10-year up 13 basis points to 451. But big things that I think could help the market and change things next year will be some lower inflation readings as shelter catches up, and the mechanics of it. Some of the replacement numbers in the year-over-year inflation readings, they do get a lot higher starting in January, which we'll get that report in February. And I think the shelter's already just beginning to catch up, which is the biggest component of the inflation reports. And then on the labor front, February, we'll get that final QCEW data. I think we're going to see that the labor market hasn't been as strong as we thought, and that could help things too. So, without going too deep into it, Chris, on the market, we are projecting that while things are getting a little bit worse right now, next year, over the next 6 months, I think there's a good chance that we could see rates start to really come down a little bit, not to crazy levels, but I think you could see them come back to where they were in September, around 6%, or maybe if we get lucky, a little bit beneath that.
That's awesome. And not big swings, middle swings. We're kind of in the range now of what, if you look traditionally at interest rates, we're kind of in like a normalized interest rate environment. So would you say that in today's world that clients have kind of normalized to where rates are right now, and it's not going
quite.
to give an effect?
So if you look at like an average of mortgage rates over the last 40 years and you look at just the actual number, yes, we're at like a normalized area or rate, but it's not normalized for many people still, because so many people either bought homes or refinanced and are locked in at sub 3% rates, or, so while 7% isn't historically that crazy of a rate. I mean, my father will tell you, he remembers when it was like 15%, right? But comparatively, it's still deterring people. People have the lock-in effect. Maybe they want that bigger home with an extra bedroom, but between the higher price home and the higher rate, they get sticker shock and they have that lock-in effect. And of course, most people took advantage of the refi opportunities. Obviously, there's new transactions that have been done, but a lot of people refinanced or bought homes, and there's certainly, I think, a lack of activity due to rates being higher. We did see a little bit of a tease when rates in September came down to 6%. Boy, we saw a huge surge in refi activity. We saw more purchases happening. And then that was a short-lived opportunity, and things moved higher, starting with some of the strong jobs data that really set the tone negatively for the bond market. It's kind of frustrating, though, because we're finding out that a lot of those jobs reports really weren't as strong as they seem. But nonetheless, the bond market reacted to it.
Wow. Yeah, only half. Only half the amount of you only missed it by a little bit, right?
Just by that much.
So I'm interested in looking at, outside of what the Fed is doing with rates. We have an incoming administration change, and the economy that affects the entire world.
Mhm.
What do you think is going to happen? Do you have any type of forecast for what you think is going to happen when that administration change happens?
Well, you're already seeing the markets react to what they think is going to happen. So you've seen risk
Hmm.
on asset prices like the stock market, like cryptocurrency, move much higher because Trump is believed to be somebody that is, pro business and somebody that would be good for asset prices in on crypto. He's the first pro crypto president. He removed Gary Gensler, who was a big blocker from the SEC, and put somebody that's pro crypto in his place. So you've seen a lot of risk on assets move higher in anticipation of Trump. But then you've also seen the bond market react negatively. There's been a kind of Trump tariff trade happening in the bond market where, listen, Trump has a very stern stance on global trade and wants the US to, not be taken advantage of. And he's threatening tariffs. A lot of people think that the tariffs are going to cause inflation to move higher. Now, it's yet to be seen. Listen, all I have to go off of is his first term where he did impose tariffs, but they were so effective that the next administration left him. And we saw core inflation drop to 1.9% while imposing those tariffs because he did other things like deregulation and such to bring down to bring down inflation. So listen, nobody knows for sure what's going to happen, but the market certainly on the risk on asset side are reacting favorably in anticipation, but the bond market has not been reacting favorably because some of those tariff threats.
Interesting. What a wild time that we live in. So shifting gears a little bit, um, artificial intelligence has been a huge week for AI as well. You guys have gone through the rebrand to Highway.ai. How are you guys looking at artificial intelligence changing the marketplace, changing the mortgage industry specifically? What do you see coming in the future with all this technology change?
Yeah, I mean, it's hard to say exactly how it's going to impact our specific industry, but it's certainly going to be everywhere eventually. I mean, ChatGPT is pretty freaking incredible. You know, um, uh, I think that from our side of things with our highway products, we eventually want to get to a place where the customer experience is a bit different, where you're pretty much talking to the AI about what type of scenario you have, and it's generating reports based on that conversation and making it much more of like a customized experience where you're having a conversation with the AI as opposed to manually maybe creating some of these things. So I think it's something that'll be eventually if we're able to put that into place, something that is easier to use and quicker to get the results or the types of reports that you're looking for based on what you're telling it.
Yeah. The AI assisted loan officer or mortgage professional, I think, is going to have a seriously outweighed advantage over somebody that's not leaning into these tools and not
Yeah,
leaning into the
I,
technology.
I think it could definitely make you more efficient, by leaps and bounds. But also, I think all of the different, LOSs, POSs, different things that all the different tech stack that mortgage professionals use is going to be impacted by it. And there's some companies out there that I've seen that have some pretty incredible technology that they're already rolling out where
Mhm.
it's much more advanced as far as like the customer uploading docs. It's able to separate different things and knows what to look for and makes the process just that much easier and seamless, saves you a ton of time, a ton of cost. So, it will continue to evolve. I'm sure there's things that we're not even thinking about how it's going to change or impact the business. But it's pretty incredible to see. I mean, boy, look at the tech sector with companies like Nvidia and stuff. I mean,
Oh, man.
it's insane.
Yeah, Google's new quantum chip is going to be, it's a game changer. So I've never talked about this publicly, but I'll share it on the podcast. It's a little golden nugget for those of
Mm,
you that are still with us here. So, Dan, I've got a phone number.
mhm.
It's 1-844-512-2110. And I'll send it to you after the show.
Okay.
844-512-2110 for all of our listeners. And what that is a lead gen form. It's a voice AI. So what we're doing is we're saying, hey, loan officer, give this to your real estate agent and give it to all your leads. Give it to all the people that check in at your open house. Get them to call this number, check into the open house, and the AI talks to the person and asks them all the lead gen questions that you would do on a pre-qualification survey. Gets all the information, automatically puts it into the CRM, and then books an appointment with the lead, and it just shows up on the calendar of the loan officer. So they're sitting there on a Saturday afternoon,
Wow.
somebody comes through an open house, books a calendar appointment, and it all happens with AI just running the whole process. And it's not like a form where it can only do the form submission questions. It's AI, so it can have a dynamic conversation, but always come back to the goal of what it's trying to do, which is to qualify the lead and book the appointment. It's
Wow.
unbelievable how fast it's moving.
Wow. That's pretty amazing.
So you look at stuff like that, and it's the Wild West out there. So, okay, we got all this great data. The market's changing, technology is wild. If we could bring it back a little bit for a loan officer listening to the show, what's your advice to a loan officer in today's market as to what they can be doing, regardless of the market, to really continue to grow the business and bring loans in through the door?
Yeah, that's a great question. I mean, I think there's no like silver bullet. There's a lot of things that they can be doing, but just to name a few, I think it's more important than ever to really be an expert on
Mm.
the market, right? So, I mean, any relationship is it's going to be paramount to have trust, right? And that's trust with your customers, trust with your referral partners. So, in my opinion, there's two really great ways to build trust. One is vulnerability, right?
Mm.
Meaning, not pointing out all the rosy things, but maybe pointing out some of the things that your customer or referral partner should be looking out for, much like you would advise your friend or family member. And vulnerability can be tough for a lot of people because maybe your ego gets in the way, or you think that if you show weakness or vulnerability, somebody might not want to work with you. But it's one of the best ways to connect with people and build trust. And the other one is with knowledge, but you can't fake that. I mean, people are gravitationally pulled towards somebody that they perceive as an expert, a master of their craft, somebody that's put in the work. But you can't give what you don't have. So I think it's really, really important in this environment to be able to master those two things, especially on the knowledge side of things, because we have a lot less opportunities out there than we were used to a few years ago. So your conversion is more important than ever. If somebody were to ask me what's the best or fastest way to increase my business in today's market, well, it's to increase your conversion to close more of the opportunities that are already in front of you.
Yeah.
So, I think by making sure you're an expert, you can articulate that. I think it makes a huge difference. I mean, if somebody were to say to you, hey, where are rates headed and is now a good time to buy a home? If you're like, yeah, market looks pretty good. And boy, if I knew where rates were headed, I'd be drinking a pina colada on a beach somewhere. Maybe that's like a safe answer, but I think you just blew an opportunity to show your expertise and ultimately to build trust with the customer. So, if you were to answer that a bit differently, like, I think now's a great time to buy a home. We've seen a really strong housing market. And although rates are a little bit higher than maybe you would like, I anticipate rates to come down next year because of the fact that inflation should moderate. The labor market is throwing some cracks and some signs of weakness. And the reason why you should buy now instead of waiting for rates to come down is because for every 1% drop in rate, it's estimated by the NAR that there's like 5 million more eligible buyers. So, we likely will see good home price appreciation. And then when rates do come down, we can always refinance you. But I'm just giving you something off the cuff here, right? But I think being somebody who's gonna have a better opportunity or conversion with that customer, pina colada boy, or somebody that really can articulate what's happening and give them some good advice. So, um, that's what I think is really critical. And the other thing, obviously, is relationships, right? So,
Yeah.
right now your realtors need you more than ever.
Yep.
Those that are on the buy side or focus on that, they're under attack, and there's a lot of these other companies now that are coming out of the woodworks too. I don't know if you saw, but the guy that was involved in the NAR settlement, he opened his own like real estate company from I believe it was Stitzer, and he's like in direct competition now with realtors. So they need your help more than ever on the buy side to justify their worth and to really show why their expertise is needed in today's market. And if you look at the list side of things, obviously they're more important than ever. So you need to be making sure you're adding value and helping them close more transactions, so they want to send you business. So I think those are just a couple of the things that I'd be focusing on.
Yep, absolutely. Close more of what you got and new relationships on the front end. Database, qualified realtors, let's go. That's fantastic. Dan, I know how busy you are. But if I may, seeing the growth of the MBS Highway and the acquisition and the path and the journey, and I don't want to take too much of your time, but would you be willing to share with the audience just a little bit more of your personal story? Like tell us about you, how you've
Yeah,
come up and what that all looks like.
yeah, for sure. So I think it's always funny to ask people how they got into the mortgage business, because it's not like a typical profession where, it's like, I want to be a basketball player when I grow up, or I want to be an astronaut. Most children don't have aspirations to be a mortgage professional, right? Somehow you got into the business by accident or whatever it is. That's usually the case. But I was the exception, where I wanted to be in the mortgage business from a very, very young age, because that's what my father did. And
Yeah.
my father was, is, and has always been, my best friend, but really my mentor and teacher and my hero. So, growing up, I used to run around the office with my twin sister when my dad was originating at the time. He owned his own mortgage company, did little odd jobs at the office and stuff, and then I'll never forget my dad. He sat me down and he said, son, he goes, there's a lot of smart people out there, but you know what the difference is between somebody that's really smart and somebody really successful? And I was like, well, what is it? He goes, just going out there and freaking doing it, right? And taking the shot and like taking the leap of faith, taking the initiative and the steps to take action. And when he said this to me, what he was talking about was giving up his career of originating, which he was doing very well. He was one of the top originators in the country, and creating a company at the time, which was the first of its kind, called Mortgage Market Guide, where he believed that he knew what loan officers needed to know to be successful, and technology had just changed at that time, where we could do alerts through dialers and text messages and such. Right, this was a long time ago now, around 2001, I believe, or so. And he created Mortgage Market Guide. And that was a big shift, a lot of uncertainty, going from making a really good living originating to starting this new SaaS type business, subscription business. And we grew that. I really started working with them, on a more real level at that point. I was in college, and I noticed that my father was going kind of around speaking and kind of doing like a one-man show to get people interested in Mortgage Market Guide, which back then predominantly was a written daily update and alerts. And the alerts were extremely quantifiable before Dodd-Frank back then. But that was the majority of the service. And it is something that I saw he was like breaking his back going and speaking, kind of like a one-man show. So I created the sales team. So being in college at the time, I was in a fraternity. And believe it or not, I recruited like 12 of my fraternity brothers
No
to
way.
work on the sales team. So we had this young, very hungry, but very fun sales team of 12 guys from my fraternity at college. And we together, I mean, we grew the company to be pretty ubiquitous within the mortgage space. And we had a successful exit, and we had a 2-year non compete. My father went and did some stuff, and probably should mention this for those of you that don't know my father. It's Barry Habib, but he went and did some fun stuff. He was the main lead producer of the Broadway play Rock of Ages.
Yeah.
But I then went to Morgan Stanley, and I took all my licensing, the Series 7, 63, 65, 31, Life Health, and I became a financial advisor at Morgan Stanley. And then I ended up joining a really successful financial advising group called the Moldaver Quebec Group. This was the number one Barron's ranked financial advising team in New Jersey, which is where I'm from. And that was a great experience. I actually shared an office with Wayne Corbett, who was a receiver for the New York Jets,
Oh,
and
cool.
he was on the team. He certainly opened a lot of doors and stuff for the team as far as advising people and managing their money and stuff. But then, you know, 2 years went by, and my father approached me and he said, Dan, a lot of people they want us to come back and maybe create another company. The non compete is up, and we ended up creating MBS Highway. And
Hmm.
MBS Highway, initially we had some challenges. I mean, I'll never forget this. We thought it was a good idea to offer it free for a period of time to
Right.
just get a big database built up. Well, our tech team somehow, after getting several thousand users on it, deleted the database. So so imagine
Oh
having to
no.
start from scratch again. We did, right? And then, one thing is that confidence can be pretty fleeting, right? We were doing like the same stuff we were doing with Mortgage Market Guide, but we kind of hit a wall after like getting some subscribers, and it was like, man, what are we doing wrong? What do we have to do different? And we really pivoted in two ways. One is instead of just doing the updates and stuff, which we do video now instead of back at Mortgage Market Guide days, we would do a written version and the alerts and such, which still valuable to help your customers and keep them happy and things of that nature, but not as valuable as before Dodd Frank, where you could literally pocket the difference. But we started to really heavily invest and create data and tools. So MBS Highway became much more than just a market advisory type tool, but it was hey, we can really help you demonstrate in your zip code, in your markets, what's the opportunity in housing, or is it better to buy versus rent, or should you wait for rates to come down? So we've really created a tool for any scenario to help that mortgage professional with their conversion. Also, give you so much stuff that you can brand or co-brand with your realtors to be an asset to them and help them in their business. And then the other thing we did to shift gears was we predominantly before mostly focused on individuals, and we weren't really
Right.
doing a lot of corporate relationships. Now the majority of our business is corporate. So around 2015 we changed that, and then you start getting big chunks when you're getting large companies and stuff. So the combination of the two, that got us to where we are today, and we continue to try to innovate. I shouldn't say where we are today, because about a year and a half, almost 2 years ago now, we acquired List Reports because we thought that List Reports was doing some amazing things. We loved their technology, their data that they had was incredible, and we saw a lot of synergies. So we acquired List Reports, and now we have our brand is called Highway, and then under that you have MBS Highway, List Reports, as well as Home Report. But starting with List Reports first, that's a tool that you can look up agent data or LO data, much like on
Cool.
some competing services out there, like an MMI, let's say. But the difference is we really try to make it actionable, meaning
Right.
you follow these agents, we send you alerts as to what they're doing and when you should engage, and then we give you the content to engage with so you can show the value that you can add. And then we have an automated marketing platform where all you got to do is pair with the agent, and then every day the agent gets from you social media posts, articles, but then if they have a new listing, about 10 minutes later they get 25 pieces of co-branded marketing content that pretty much hits all their marketing needs, from open house flyers and marketing kits to property websites. And you're not lifting a finger, but you're keeping that realtor happy and adding a ton of value. And then the last one that we just added is Home Report. That's a new product where obviously staying ahead of or in touch with your past database is critical. There's great companies out there that have figured that out, like HomeBot, for instance, but we created our own version of that called the Home Report. I think it's got some advantages to some of the other ones out there, and it's in our ecosystem. But that's kind of our three main product lines there.
That's amazing. What an incredible growth story. That is amazing. Congratulations.
Yeah, thanks. And you know, getting back to the CEO of the company, and who I said was my hero, Barry Habib, my dad. Many people, I think that we have like a really amazing community in the mortgage business.
Yeah.
Obviously, some of you listening will be familiar with the fact that my dad's been battling cancer. and he had a pretty serious type. He did some pretty aggressive chemotherapy, didn't have a full response to it, and he actually just had to do a newer treatment called CAR T, which it's pretty amazing what they can do now. They take your T cells and they program them to look for a specific marker that exists in your cancer. So it's programming your immune system to try to target and kill the cancer that you have, which is incredible that they can do things like
Wow.
this. So, boy, he's had to do all kinds of stuff. I mean, in order to prepare for that, he had to do 10 sessions of radiation, a couple days in a row, 3 days in a row of chemo, and then he got the CAR T cells infused, and then he's got to stay up by Memorial Sloan Kettering, New York City, for a few weeks to be monitored. And it's just before he was my best friend, my hero, but boy, has he taught me a lot and showed me uh, how important mindset is, how important
Mhm.
gratitude is. He's somebody that even though he's going through the things he's going through, he still has gratitude every single day. And one of
Yeah.
the things he's taught me is that if you have gratitude, even while going through these tough situations, there's always opportunities that you can find in tough situations. And that, I think, extrapolates to any situation, not just a healthcare type one. And he is trying to help others. I think one of the things he was fearful of going into this whole cancer diagnosis and treatment was the unknown, right? People are afraid of what they don't know, what to expect, and he couldn't really find anything out there. So, you know what he did? He said, even though he's going through this, how can I help others? And he recorded every single day during the chemo a video documenting his progress, how he felt, and he gave it to some of his friends out there like Tony Robbins and stuff. But the goal is to get that out there so others that may be in a similar position don't have that unknown or that uncertainty. So pretty incredible stuff. The bottom line is that just when I thought he couldn't be even more of hero to me, he went and has surpassed my greatest expectations. And you want to talk about dedication and believing in what you do and how important mindset is. I mean, I think a lot of people going through that would probably take it easy. Maybe that's a good excuse not to be as involved or work. The guy hasn't missed a daily update, maybe a handful, because he was literally getting treatment at the time. But I mean, I don't know how he does it, but it's just it's incredible. And yeah, he sure is my hero. So
That is amazing, Dan. And to Barry, to see the mindset and the leadership through all of that has been absolutely incredible. I mean, I heard he did like a like something crazy, like a 4,000 person event or something
yeah,
like that.
5,000 people. He went. He was undergoing this chemotherapy treatment. He had to do 6 rounds of it. It's called Epoch R, and they told him that you're going to be feeling really weak. You're not going to be able to travel. So he had something planned for. It was the UWM live event, 5,000 people. So I was on standby to speak in his place because the doctors were telling him that he's not going to be able to do it.
Yeah.
Well, Matt Ishbia was okay with that and such, but here the event comes along and he goes. He flies there and he gave like the most powerful, best presentation I've like ever seen him give in front of 5,000 people. And that's the kind of person he is, right? Is they tell him he can't do something and then he goes and does it.
That's amazing. Well, from myself personally, but from my family to your family, we're thinking about you guys. We're keeping you in our prayers because it's not easy to go through. So,
Yeah,
uh,
well, just to finish the loop on it is that he got the CAR T treatment. He got it infused into him, and certainly asking for some prayers. But we hopefully will have a successful outcome now that they've infused those T cells back into him, and hopefully they do in fact kill the cancer. But we'll probably know whether it was successful or not by the end of January. So that would be
wow.
a good present for the new year there.
Yeah, absolutely. Well, our whole community is behind you and sending prayers. And
Thank you.
thank you for being so generous with your time and sharing your story. For those that are listening that would like more information, where do people go? Uh, where do people go to connect with you?
Yeah, so if you want to learn more about MBS Highway or list reports or home report, it's just Highway.ai. But if you want to connect with me personally, which I would love, I'm active on Facebook, Instagram, and it is at the Dan Habib.
Awesome. And we will have all of that information in the show notes for the episode. So again, Dan, thank you for being on the show. To all of our wonderful listeners, thank you for listening, and we will see you on the next episode.
Thanks for having me, Chris.